Hey, good morning, everyone. Marty Missouri here. It is Thursday, the 8th of February, 2024, with your end of week stock market snapshot. And I am definitely going to keep this one quick, folks. I'm just going to go through a few charts with you, the usual ones. For those of you who aren't subscribers to the blog.pwa.net, if you're interested in just the dynamics of the past 2-3 months in the market, the overall setup, some historical context, if you will. I think it was a pretty good one this morning. So those of you who are video watchers and you're looking for more substance in terms of the overall setup in the market, and I know I do that a lot here as well, and I get into that, I think, in the economic updates. This morning's one in particular, I call it an improving yet dubious setup, I think is worthwhile. It's very visual, lots of charts to take in. Okay, so for this morning, though, just a few minutes on the setup. So not really anything has changed. These are bearish looking patterns on the daily and very definite bearish divergences back into overbought territory. Here on the S&P, again, you've got a breakdown below that before you get a sell signal. And this looks like a very heavy market, losing momentum, marginal new highs. This is the kind of setup that I've shown you over and over again over the years. Pretty high probability, nothing guaranteed though. We've also seen them fail. But this looks pretty classic that there could be a down move here in the not too distant offing for the S&P. Looking at the 60-day, 60-minute chart, this totally confirms that setup as well. On the very short term, rising wedge pattern. Bearish divergences, right? Overbought on the hourly chart. On the NASDAQ 100, this happens to be the hourly. Here we are with very classic rising wedge pattern, going a little higher here this morning. Yep, you've got your flat, therefore bearish divergences as the price moves higher. You can see you had that here. We took this leg down a little bit, had it here, definitely. Took that leg down, came out of this one to the upside and so forth. And then on the daily, pretty much the same look as the S&P, maybe a little more constructive here on the MACD, but getting to overbought, bearish divergences, yada yada. The Russell 2000 small cap stocks. Now remember I said I'm not bullish small caps, but I was more constructive on the Russell among the three that we typically look at. Remember we had this falling wedge pattern, right? And down here, I had drawn lines last time, not quite there, but here you could say that's a bullish divergence. And folks, we broke out of that. Now that would be a buy signal. And while the S&P is down today, the NASDAQ 100 it's actually up 20 basis points. The Russell 2000 is actually up 80 basis points. And by the way, the equal weight is down 21 basis points, and looks like most sectors are down. Most stocks are down, folks. This is that ugly breath that I just keep talking about that's not a signal of a healthy market internal setup, so to speak. And then since we're doing this today, let's go ahead and look at the 60-minute chart. You have a kind of a classic triangle pattern. That's a consolidation pattern. But from this point to this point, right, which would be from right here to right here, you've got a bullish divergence. So even on the 60-minute chart, small caps look pretty constructive. This could break down in a hurry. Remember that volatility there is pretty high. On yields, that bull flag played out perfectly. Then it rolled over, found support right here at a key 3.85%. This is the 10-year yield on the Treasury. And here we are, back up, consolidating a little bit here. We'll see if that's a bull flag. That's going to be problematic for stocks, I can almost promise you. But I don't know that. We'll see. It's going to be all about the data and what the Fed has to say. But yeah, this would be a pretty neutral look here for yields. And then for the dollar, was a pretty good pop earlier. You can see we've come off of that in the dollar. And right here, a higher dollar is bearish for equities. We broke out of that just like that engulfing candle said we should, but that 104 area is very key resistance or support, depending on what side of it you're on. The dollar is going to move with largely on what foreign currencies do, what interest rate and inflation indicators here in the U.S. say. That'll be interesting to continue to track, because the dollar is very key, as are yields right here, to the near-term outlook for equities. That's kind of what they're trading on. And they trade on different things at different times, as do commodities and other things too. Those are weeds I'm sure we'll be exploring in the coming weeks and months. So again, blog.pwa.net. I think this morning's written blog is worth reading. And I'll leave it there, and I'll be back in a day or three with your economic update. Folks, thank you as always for watching and listening. Talk to you again soon. Bye-bye.